So today we're going to be talking about Microsoft. Obviously they had a recent outages and the stock has gone down a little bit, but let's see. I think they got earnings coming out in 2 weeks time, so we just want to see where the stock is and see if it's in a good buy range. The stock has gone over 27% this year, it has been at a good run. If you look at the share price, has gone up 27% and the market cap is over $3 trillion, which is a great achievement for the company. But obviously in the last 5 days, the company has gone down roughly about 3.6%. It's not a big deal in the grand scheme of things. The reasons for this has been the CrowdStrike mayhem that has affected over 8.5 million devices, the Windows devices. They've been trying to collaborate with Amazon Web Services and cloud platforms as well to address this issue. The major disruption that happened because of this has been the air travel industry. The outage has grounded flights, caused thousands of cancellation and delays in air travel. That's the reason for the stock price down. Any thoughts on that side?
No, I think it makes sense as to why it went down. Like, it's not really something you would want to see. I think it affected, like, it's worldwide, so it's not just to like a particular region of the world. Like, it's affected everyone. Like, it affected everyone in Australia, a lot of US, and like all around the world as well. And I think also, like, another major thing I saw in the news was it was also affecting emergency services as well. So yeah, like a lot of issues that it's causing. Like, especially, I think the issue itself is mainly just making your Windows computer just show up with a blue screen, so you can't really do anything. So it makes it very tough to get anything done.
So obviously analyst rating on this company has been very bullish too. As you can see, there's been a very big, like 97% of them got a strong buy on them. The potential price targets for this company as recent as 2 days ago has been max $600. Average is about $500 and minimum is about $465 for next year price targets. So obviously all the analysts are very bullish on this company for the next 1 year. The biggest successes of Microsoft has been its top line, which is the revenue. So they've been growing the revenue about 13.96% year on year for the last 5 years. As you can see on the charts, they're going really gangbusters, I guess, in that sense. And I think predictions for this year has been roughly $2.36 billion. $236 billion. So yeah, I think that it's a great company and they're growing their top line, which is great to see.
Yeah, they have many sources of revenue. It's not just gaming or data centers or just the Windows computer. They have many other sources, and like now with the rolling out of Copilot and AI in their products, I think it's even more appetizing.
Another one too is the free cash flow. Free cash flow is a very important metric in any company that's becoming profitable, I guess. Free cash flow per share over the last 5 years has been 12.6%, which is, again, anything over 12%, anything over 10%, it's a great.
Yeah, I mean, it's a great company all around, and like, yeah, they have a lot of cash on hand, so they can definitely use it for more innovative solutions if they choose to.
Over the last 10 years, it's been CAGRing roughly about 10.6%.
Yeah, like with the free cash flow, like they could definitely give back investors the money that they've earned, and so I think even the payout ratio
is not that high too. I think it's probably around 30%. So which leaves a lot of that 70% left to reinvest into the company, paying out any debt. I don't think they got any debt, but even making any acquisition, which is they have been a big one recently too. Obviously, OpenAI, they have a good stake in that too. So obviously, it helps having that kind of free cash flow, I guess, for the company.
Yeah, exactly. So like they definitely can use their money for other things, and I think like if they're able to give back to the shareholders this much as well, I think it's something definitely worth having in your portfolio.
History too on this company. So they usually increase their dividends once a year, what I observed anyway. So I think at the start of the year, every January, they put the dividend up by that 10%, I guess. So roughly right now it's 0.75%. Estimations are roughly 80 cents for this January in 2025. So that's what they could put up to. Obviously, a lot of factors depends on it. And other metric is to yield on cost. It kind of gives you a long-term perspective on the company. If you look at current yield on the company, it's 0.67%. But if you hold that for over a 5-year period, because of the dividend growth you're getting, you're roughly sitting over 2% right now. And over a 10-year period, you're sitting close to 6.7%, which is tremendous.
So yeah, great return, and I think it kind of just shows the company's financial strength.
It's one of those bottom drawer company. You don't have to look at it. It don't have to be quarter to quarter. Nothing much changes. They just shrug along, and that's it. Just kind of put it in the bottom drawer and just sleep. And how to play the Microsoft stock right now. So obviously we had a little bit of pullback, but there's actually 4 ways we can play this. One is the Microsoft stock itself. So you just buy the nice Microsoft underlying stock. The second option obviously would be the 2x ETF, which is a leverage ETF. So you get 2 times the exposure to the Microsoft stock. And you got curve yield premium strategy. We'll look at what they do, each one of them, in the next couple of slides, but it's a monthly dividend stock, I guess, on your Microsoft stack using the options. And obviously you got your yield max, which kind of gives that high yield on the Microsoft stock itself and kind of provide you with good income. We'll break down each of them in the next couple of slides. So do you want to run through this one, Si?
Yep, so it's a all 2x share. So basically what it uses is 2x leverage exposure on the daily price. So it tries to deliver twice the daily performance of Microsoft. So the other day, or well, last week, Microsoft went up, I think, 6% in one day, and the stock went up 4%. So this particular stock went up 12%. So yeah, it's more just used for short-term trading on news cycles that might happen. So for example, in news cycles such as the CrowdStrike, it went down quite a bit. So people might think of that as a good buying opportunity. So, coming Monday and Tuesday, you might see the stock go back up, 2-3% in a day, and you can use this strategy to get like a 6% return on it.
And the next one is obviously the yield max strategy. So this is the option income strategy. So it is an actively managed ETF that seeks to generate income by running covered call strategy. It aims to provide monthly income and some kind of price exposure to the stock, but it is capped its potential return on the stock. I think they usually write their cover calls roughly about 5 to 15%, depending on the stock. So you don't get, if the stock goes up by 10-15% in a day or in a week or a month, you don't get all that stock. You only get up to the 15%, I guess, depending what the cover call strategy was. So you have to look at that individual strategy they're doing at the time and time, because it changes month on month, so it's not the same every month. So yeah, and we'll look at more in detail next one what the strategy is. Yield max cover call ETF in a nutshell. So what they do is they do a short-term put and a long-term call, which gives you the stock exposure. And the second is a short call, which gives you the income procedure, which gives you that premiums. And obviously they got treasuries at the bottom of it too, which kind of gives you that nice consistent income coming through every month. The results of this, you give covered call strategy and you get monthly income, and the money calls allow some upside potential in the stock as well. There's not a lot of leverage, and then they're not really losing out the stock at the end of the day. The main benefits of yield max would be high income potential, convenience and ease, so you don't need to know a lot about option strategies or anything like that. It is all managed for you, so you just have to pay that 1% management fee, I guess.
Yeah, I mean, we'll go into it in a second, like with the charts, as to see how it performed in relation to the other options that we have available. So, and we'll see if that's something that you prefer in your portfolio.
Yep. So other one is pretty similar to the yield max. It's the curve yield premium strategy. So this pretty similar to the yield max. What they do is they actively manage ETF. They're trying to do the same thing, do a cover call option. It aims to provide monthly income and some participation in the price gain of the Microsoft stack, but it is capped. Obviously, you don't get all the full rise in the share price. And you also got, just similar to that, you got some treasures at the bottom of it too. I think the main difference I found with both the strategies is the yield max strategy is what they do is they do a cover call strategy on a weekly basis, and they re-roll it again every week, so it changes on week. Where I found with the curve strategy is they do it monthly, according to some of the interviews I watched about the CEO. So they do the cover call strategy on a monthly basis. So if the stock moves up nicely over a month period, I feel like you get better result out of this one too, compared to the other one, but it is capped, right? If your stock goes up more than 20% in a month, you're only getting that upside potential of maximum 15% on the stock. Your feedback on this?
No, it'll be interesting to see how it works out in the long term.
But I think they've only been around for the last 1 year, so we don't have a lot of history to go on. It's very short term. So we have to see how this strategy perform over the next 5 years period before I dip into them, I guess. But let's see. So the first, obviously, if you look at the chart over a 1 year period, the 2x leverage ETF has beaten the normal one, which you presume, which it should do. But obviously, because if you look at the chart right now, which is the 12th of July, it's only gone up to 40% on the 2x, whereas the normal stock has gone up 32%. That's because when it goes down, it goes up a lot faster than the Microsoft stock itself, because it's going 2x down too. So the strategy with this is you have to pick at the right time. So it's very much on a timing basis. So short term, who knows where it goes. Over a long term, the stock going up nicely, it works out on this strategy. So this is year to date, still over a 3-month period, still the same thing. The 2x leverage ETF has beaten out. It obviously is trying to give it 2 times returns, as you can see. And if you look at a short-term period, which is 1 month, obviously because of the recent CrowdStrike deal, if you see on the charts, the 2x has gone a lot down compared to the Microsoft itself. It's only down 2%, whereas if you look at the 2x leverage, it's actually gone down 5.6%. So that proves the point. Timing is everything with that one.
Yeah, like as I was saying before, like, you know, if you like, this is probably a good buying opportunity, you know, if there's anyone looking to get into this kind of trading. So if you look at it as, you know, it's down 5%, you know, Microsoft stock itself is down 2%, you know, for 1 month, you know, and it's been down quite significantly over the last few days. So now might be a good time to get in. The stock might go up 2%, but this MSFU would go up to maybe like 4 or 5% in one day.
So we're trying to break it down into total returns. So we're trying to break it down into how much money you actually made, how much returns you made if you invested $25,000 into it. This is just hypothetical scenario. So I'll break down the first one slide. So this is just the normal Microsoft stock itself. So if you bought the stock on the 18th of the 1st January this year, you would have bought, if you put $25,000, the current at that time the share price was $393. You would have got roughly about 63.4 shares, and in total, if you reinvested, the percentage return is roughly 11% per last 7 months on the stock, and year to date you made roughly, after investing your dividends, $2,800 on this stock if you just bought the pure Microsoft stock itself.
Yeah, so with the 2F ETF, you can see that like the share price at the time in January was $42.32. With $25,000, you're looking at about 590 shares you can own at that time. And they also do a similar dividend payment. You know, 26th of March, it would have paid a dividend payment of 30 cents. And with the amount of shares you own of 590, you're looking at a dividend payment of $180, which means with the reinvestment, it's about 3.91 shares. And, you know, you're looking at a total return from 18th of January to now, it's about 11.29. So it's only an extra, you know, not too much higher than the actual Microsoft stock, but the total returns is $3,200. So it's an extra few $100 more. You just want to go back the slide so you can see the difference. So yeah, so you're looking at about an extra $400 in share price difference, or total return.
Total return if you invested on the 1st of the 18th of the January till today, which is, yeah, I think, but the dividend payment has been good though, compared to how much you get. If you go back, if you look at how much dividends you get, you're only getting $47. Obviously, the share price has gone higher, so you get less shares, so you're only making $47. But in this, it's 2x leverage, but you're still getting good dividends on it.
Yeah, you're looking at $400 in 6 months,
which is not bad.
Which is not bad. And yeah, like on top of that, you have a stock price appreciation as well of 11%. Yeah. That's pretty good.
And if you go to that, I think this one is a Curve ETF. So if you look at the Curve ETF on the 18th of the 1st, it's trading roughly about $27.08. You would have got about 923 shares in the company. The dividend payment, obviously they pay monthly dividends in this one. So you would have got dividends of 26 cents, which would have given you roughly $240. And if you reinvested dividend, it's roughly $8.86 because the share price was on $27. And if you reinvested every time you got your dividends and you put it back straight into the stock again, buy more of the ETF, you ended up roughly around $977 after 7 months to year to date. And you would have made roughly just over 2% return on the stock. Total return basis, you made $1,900 after investing your dividends.
Yeah, so you only have a $300 in share price appreciation, but you have another, $1,900 in actual dividends. So it's more of a income strategy as it explains itself. It's an income strategy. It's not meant to be looking at share price appreciation. So that's what we get here.
And the next one, which is the yield max strategy. Obviously, yield max gives you bigger yields on the stock, but let's see how it kind of perform on the stock basis. Do you want to run through this one, Si?
Yeah, so this is 18th of January again, it's $22.38. And for that, you'd get around about 1,117 shares. And these guys do a monthly dividend as well. And so you can see there, 68 cents, 76 cents. But on 8th of July, it actually dropped down to 38 cents. Dividend payment itself is very good, as you can see, $700.63, 875, 869. So that's pretty good dividend payments per month. And overall return, you're looking at about $27,390. So it's about $2,390. So the stock price has dipped quite a bit due to the recent news, amongst other things. So it's down 6.84% from when you would have bought it in 18th of Jan. But in terms of dividends you would have received over that time period, it's about $4,300, which is very good. But it's something you've got to weigh up for yourself. If you're willing to ride it out, so because you can see there on 8th of July, the share price was actually $22.10.
So if you want to, I think next chart kind of visualizes how it looks. If you buy the main stock itself, you'll be making roughly $2,800. If you bought the the 2x leverage, you would have made $3,200. The Curve ETF, you would have made $1,800, roughly $1,900, I guess. And the Yield Max, you made $2,300, which is not bad, I guess, in a total return basis because you're getting regular monthly income. I feel like each of them got their own place in everyone's portfolio, depending what you want out of it. So if you want long term, if you're getting dividend growth and you're happy to have the stock for the next 20, 30 years, I think buying the Microsoft stock at itself sounds like a good strategy itself. And if you're really bullish on the company and if you can get it at a really good price, maybe it drops 10, 15%. And if you can get it with that 2x leverage, probably a good option too. But yeah, the other two options, the Yield Max, the option strategies, they give really good monthly incomes. But the problem for me, I guess, to put into it is they haven't been there for that long. I don't know how they perform if we have a downturn in the economy. And the options haven't been worked out. Like certainly not even been a year. So I want to see them perform over the next couple of years just to see how they go before I'll dip into it, just so I can understand how they perform in different market conditions.
Like the biggest thing about the MSFY and MSFO, like MSFU is kind of straightforward. Like it's really just timing the market and trying to make sure you get at a low point and you trust the shares that will go up. Like for example, Nvidia, Tesla, like they usually have quite a big run-ups when they start going. So if you're able to get them at a good price, like maybe on some news which you don't think will affect the stock, you can find some kind of volatility in the market that you can take advantage of. Yes, MSFU would be the way to go. MSFY and MSFO, it's more a dividend kind of stock play. You're looking at that, for example, MSFO, you're looking at about $4,000 in 6 months. So it's more about the consistency you want to look at for these shares or for these ETFs. So for MSFO, like at the beginning, it was 68 cents. And then at the end, it was 38 cents. So they obviously dropped dividends quite a lot. Now, if they keep doing that, obviously it's probably not a good way to go. So you want that high dividend payout. That's what you're in there for. If you wanted to just appreciate, if you just wanted just the appreciation of the stock, you could have just went with either MSFU or MSFT.
Another thing too, one of the other things I've kind of found out in one of the interviews too, because the way the option strategy works, if the share price drops, the dividend payment drops too, because it is getting paid on the share price itself. If the share price is like $20 and it drops to $19, your dividend payment has actually gone down because it's getting paid on the dollar value of the dividend, on the share price. So as the share price appreciates, your dividends are getting bigger and bigger because of the share price going up. And the share price drops, dividends are getting less and less, in a sense. So that's what I understood, but please do your own research on this one. But yeah, I think something to be interested in. But I think I love both of them, right? Like I love the leverage one and I love the income options of the options too, because obviously I'm not expert in option strategies, but this kind of gives you that risk-free. If you're looking for monthly income on a safe company like Microsoft, which seems like a good option.
Yeah, I mean, like that $4,000 for MSFO, that was obviously reinvested, but you can definitely look at, keeping that in your share trading account and then just using it for other shares. So, and as I said, like on 8th of July, it was only down like very, very little. It wasn't down that much. It was only down 20 cents. It's only recently that it's down to like $20 for MSFO. So really, you could have used that $4,000 from the start of the year till now and put into other shares and get go long on some other shares or like play some other trades on it, or even use that to go into the bull shares, MSFU, and get more that way. So it's really.
And so I think it depends how you want to play the strategy. I think you have to sit down, develop your own strategy, and work out a one that works for you guys, like whoever wants to do it, I guess. But yeah, it's interesting just to put everything into perspective, how it's going.
Yeah, like you have these different options. You don't just have to go with the vanilla Microsoft shares or like just your NASDAQ 100 or ETF or S&P 500 ETF. Like you have these other options which you can go to if you want better yields. Obviously, if you don't want to think about it too much, if you just want to put your money somewhere and you just kind of forget about it for a while, you can definitely just S&P 500, NASDAQ 100, these kind of like MSFT, just straight stock price, you can just use that. But if you wanted to kind of evaluate it month by month or week by week basis, there are these other options you can look at.
And I think this is also a breakdown of the chart itself. If you're more of a technical trader, I guess, this is where I usually buy the stock. Right now, it's having a pullback to that 20-day EMA, which is roughly about $427. If you look at it historically, I think the stock roughly every 2 years has a big dip. When the COVID happened back in the 2020, the stock has gone down heaps. And I think before that, around here is when I think we had the trade relations with China and everything. That's the reason it has come down. And after it had a really good run for the next 2 years. COVID time obviously dropped, same thing. And after it had a really nice run for 2 years. But if you see that over that 2 year period, it never drops below that blue line, which is a 20-day EMA. And it holds that every single time. Every time it came and touched it, it's always been a really good buying opportunity in a bull run. So that's where the stock is right now. Obviously, 2 years ago in 2022, it dropped down because of obviously the interest rates hiking, and all the tech stocks are too expensive. So it had this big correction down after the 2 years, and it has came down to always that red EMA. And that always been like the 200 EMA been an amazing buying opportunity for that stock. Now it's going on that uptrend now for the next probably 2 years. Who knows? Anyone's guess. But the blue line has been a good buying opportunity. As you can see, it has a couple of times it came and touched the blue line and went up again. So it's right around, it's 441, I think, right now. I think, yeah, 441 where the share price is. I think, yeah, 427 seems like a good price to get into this stock. Sorry, 427. So, but if I want to, I don't have a position in Microsoft. So if I'm going to get into it, roughly about 350 is where I want to get into the stock. That gives me good cushion and good amount of shares to buy. And over a long-term period, that kind of gives me that peace of mind that I got a good value on this stock.
Yeah, I think long-term, Microsoft definitely, like on a stock basis, like as a company, it's very in a very good position, very powerful position. As you saw earlier, like a lot of bullish sentiment on the stock itself.
I think what this kind of charts are good for is like if you're having that when you want to get in, when you don't have any stock, where to buy it, I guess. This kind of gives you a good perspective, and that's why you're not always buying on the top. You kind of buy it at a good price where you're not overpaying for the company in that sense.
Yeah, I mean, for me, like I'm not fully invested in Microsoft as well. I'm more looking at an ETF to invest in Microsoft. Like I have exposure to quite a few different tech companies through ETFs. So, and in that ETF, Microsoft is a big part of that. I think about 11% of that ETF. So it does affect the ETF very much. But yeah, I more or less DCA into that stock because I know, this is a company that's very good long term. Like you can go another 10 years without having to worry about it. So yeah, so that's how I would play it. I'll DCA into it.
As always, I think that's it. That's the end of the slides. As always, thanks for coming in. Hopefully it was a bit fun. But as always, nothing is investment advice. Please do your research on each of the stock. I think we kind of give them good options over there to see which one can fit for anyone, and you can go either order. You can mix it up and make a portfolio out of it, I guess, too. But at the end of the day, have a great day. And Si, thanks for joining.
Yeah, thanks for having me.
Bye.